Hey, good afternoon, everyone. Chris Lopez here, and I got a really great webinar today. It's going to talk about some current events going on in the marketplace. One very immediate event that's this year, and one's a much more bigger macro event, which has been happening in the last 10 years in the market. And both present an amazing value opportunity for us as agents to go out there and talk to our clients about, but also it also creates really good opportunities as well, where for a lot of clients who want to invest or who are investors, it should create some transaction pipeline for you as well. So we're going to go through a bunch of details here today. My name is Chris Lopez. I'm a real estate agent here in Denver. I run the Envision Advisors, and I've primarily focused on working with investors. My team's from Pueblo to Denver, and the last couple of years, been doing about $100 million a year in sales, and it's been primarily through certain techniques and also working with investors. And so this concept we'll talk about on optimizing the equity in your property is also going to help me do a lot of deals with my clients. It's also helped me scale my personal portfolio from 1 door to 9 doors, plus some other investments as well. So the whole point of this is to give you a lot of really great education, help you as an agent go out there and provide value to your clients, which leads to transactions, and also give you some insight if you are an investor yourself or want to be an investor, how you can go out there and improve your portfolio as well. So as we go through here, got to give you a disclaimer. This is not legal advice. This is not accounting advice. This is not financial advice. I'm not your CPA. I'm not your lawyer. So make sure you connect with your professional team. And I do reference, businesses out here, Envision Advisors, Property Llama, Ironton Capital. I've got have a financial interest in those. But I do want to present my great co-presenters today. And these are experts in some of these topics we're talking about, because these are really important topics. So I want to get really important and smart people in here to come talk to the topics about us. So first co-host is Andy Rhodes. Good afternoon, Andy.
Good afternoon, Chris. Hello.
So Andy's with CCI. He does a lot of home inspections, Denver rental inspections, some general contracting. Probably missing a few things on there.
Yeah, I did a lot of fix and flips for 10 years. So
he knows the investing game.
Been very active in it.
Yes. So he's an awesome resource to help your clients, whether they're buying a home, but specifically if they're an investor, you want to have Andy in your Rolodex. Two bomb guys here are Brady Mullen and Kevin Green. Kevin Green is a lender around town, known for years, investor-friendly lender, runs the Green team. He cannot make it today, but his co-host, Brady Mullen, also the Green team, is here. Brady, I'm excited to have you here.
Thanks, Chris.
As I talk about having experts in here, I love Brady's background because while his official title today is lender, most of his experience in almost 20 years is from doing financial advisory. And so he brings amazing experience, which often does not cross from financial advisory to real estate investing. He has jumped that chasm. And so he has some really great perspectives and some great knowledge to drop. And what I love about the Green team is Brady is like an agent's secret weapon with them to actually go out there and do some heavy financial modeling and do some, what about this? Sell this, buy this, refi this, buy this. Brady is a secret weapon for the Green team and agents out there using it. So as we go through here, please ask questions on here. Drop them in the chat box. We'll be answering as we go through here. But the agenda is going to really cover on the power of current event marketing. Then we'll jump into current event 1, the Denver rental license. Then number 2, the appreciation party is over. This is the big macro, change. In case you haven't noticed, interest rates went up a little bit the last year. So that has created some new opportunities out there. And then we're going to give you the education. And then we're going to put it down into, 8 bullet points into an action plan. So you can go out there and have enough information to go out there and add value to your clients and also hopefully build some transaction pipeline. So as you jump into this, we're going to start off with, because we are talking about how to generate deals, how to go out there and add value to our clients. And, as agent, we've all been through sales programs. We've all been through marketing programs. And whenever I do any type of project in my agent business, I look at 3 buckets. And this is how I've always scaled my business from being a solo agent to now having a team of 9 agents and doing, a bunch of transactions a year. I've bucketed into these 3 pillars. The first one is sales. And this is actually hey, getting a client, looking at properties listed under contract, like the real stuff that actually leads to a transaction, going to the closing table and getting a commission check. So that is not my specialty. My specialty, the other two, attention and scale. I'm really good at creating attention, or AKA lead generation. How do I go out there and grab the attention of the client? How do I go out there and be different from other people, other agents out there? And so I am very good at that. And also the scale side, how I go out there and basically increase the dollar per hour, increase more clients in the door. Those are my two, I'd say, superpowers, where most agents are great at sales. So we're going to focus on the intention and scale, so I can go out there and tell you how to give more value and do more business with your clients. So I want to have a little roundtable here discussion, guys. We're going to jump into the power of current events marketing. I mean, you've been in business for 20 years working with clients, Brady. Andy, you've had multiple businesses in various manners, and, you know, marketing, sales, it always comes up. But a very powerful thing to do with clients is current events, trends. And I always kick myself every time I don't like tap into one. I'm like, God damn it, I missed that, because it's such a powerful thing out there. Have you guys ever like incorporated that, or do you right now like incorporate like the power of current event marketing into like your business?
Go ahead, Andy.
Absolutely. I built CCI just for this current event where Denver is requiring a rental license.
Wait, is that the main reason for? I may have missed that in one of our conversations. I love it.
We started off just doing rental inspections. There was a big gap between what the market had to offer and what was available in terms of who was qualified to meet Denver's requirements. I set out, built my entire team on it, and that's all we did for the first year of our existence. It's really interesting taking that current event and morphing it into now having a team of some of the highest trained home inspectors as well. So current events, I think, not only just for creating a new opportunity, but for jumping on something, adding value to your existing. Absolutely. It's a huge, huge opportunity.
Yeah, I love it. Thank you. And you can see there, like, not just for clients, but just, you know, business strategies, investing strategies. And for our real estate investor clients, that's the stuff they want to know as well. So you get to be the messenger, and you get to do transactions that way. Brady, I'm sure the last year you have done a bunch of stuff on, you know, rising interest rates, or I know you have. And, you know, I'm going to bring in a story from we were chatting about before we hit live on this webinar today. Is you sat down with some investors this morning, and you were going through, hey, here's the market, here's this, here's what's going on in the marketplace, here's opportunities. And basically the person said, hey, I love this. I get the ideas. I've been going to your classes for a while. I had my one-on-one session with you today. Now I'm going to refi a couple properties and go out there and buy a couple new rentals, right?
Yeah.
Like, amazing. And so even though we're in a more challenging market, you're creating deals that way.
I love buying investments in challenging markets, because you've weeded out a bunch of the competition that think that they need to buy investments at a 3% interest rate on the loan, and that's just not true. I mean, the interest rate is always passed on to the tenant anyway.
Yeah.
So when rents go up, and we talked about this in one of our other videos, when rents almost always go up, they almost never go down. And when I say almost never, that's like once in the past like 70 years they've gone down on a national level with a 12-month look back. That's the
yeah.
I'm particular about the statistics that I use, but it's really, really rare for rents to go down. But interest rates go up and down all the time. If you can buy and get a better deal at a slightly higher interest rate, when interest rates fall, tenants don't pay less rent. They just don't go up as quickly. It's a great time to look at investments and take advantage of the opportunity, because the interest rate that you pay, whether you're living in the home or it's an investment, it's like a ratchet. You get the low water mark all the time. If interest rates go down, you refinance. They go down, you refinance. The rents just keep creeping up all the time. So I think it's a good time to buy, not because I don't know the future. I don't know what next week values are going to be or next year values are going to be. I have my suspicions, and I look at data and I like that stuff. But if I'm wrong, which happens a lot because humans are unpredictable things, that's why the markets, that's why you can't time markets. But if you get in at a good price and you get in with good fundamentals, and you just buy it with the expectation to hold it long enough, I mean, there's just these events create good activity to get people aware of those things. But ultimately, if you're buying and holding long term, it's almost a better time to buy when everybody else is thinking that it's not. I mean, that's classic investing.
I totally agree with your points, and thank you guys. You guys really emphasize exactly what I hope you would. Like, Andy, you talked about a current thing, major opportunity if it's a business, what's going on in the marketplace. No one is serving it. And again, still a huge gap out there. So agents, way to go out there to buy to your clients. Brady's talking from a macro level. Hey, we're talking at a decade level, how to go out there and build wealth, how to retire. And these are all topics and events that we as agents need to know and our clients would like to know as well. So I'm going to pivot over and talk about the Denver rental application, Andy, because, I mean, there has been a lot of confusion, a lot of discussion about it, but a lot of people are not aware of it. And I also saw, I think last week or two, Denver started doing the first round of fines. So could you spend a few minutes kind of just tell us what it is and what's going on with it?
So City Council of Denver a couple of years ago started talking about who are our property owners and how can they work with property owners to raise the bottom, right? And we've all heard about, I'm sure no one watching this is what we would call the old-fashioned term, the slumlord, right? But there were property owners and investors who didn't pay attention to their properties. What Denver wanted to do was raise that bottom up. What they came up with is this rental license program. It's called Healthy Rentals for All. That's the official name of the program. First step, it involves, if you're going to rent any property for longer than 30 days, you have to get an inspection and then do an application with the city of Denver. Really, really important. Everybody watching, there's a 90-day window between those two events. If you miss that 90-day window, you got to start over from scratch. We're dealing with quite a few of our clients that no matter how many times we remind them of this, call us up 5 months later and say, oops, Denver just gave me a fine and now I need you to come do an inspection again. And, oh joy, I get to pay you double. Really doesn't, that's not my favorite part of my job, Chris. I really like doing it right the first time. I don't really like having to redo a lot of work. It has now translated from the multifamily industry to every single family rental. And you want to talk about opportunities from a current event trend. Depending on who you ask, there's 40 to 60,000 individual single family units that are rental properties in Denver.
Yeah, well, you sure that's that? A couple months ago, we had coffee. I had no idea it was that big. There's no official number out there. It's all just guesstimates.
That's why Denver's doing the program. They came out and said, if you listen really close, we have to do this because we don't know the number. Their guess was 25,000 to 30,000, and I looked at all the transactions for the past 10 years. We know that investor activity is about 20% of the MLS on average.
Yep.
If you take that and you look at housing stats in Denver, there's a little bit more than 300,000 single-family homes. If we just take 20%, roll it right over, you're at 60,000 units. That might be a little high. I think from an agent basis, you've got a pool of probably 40,000 investors who own property that have no clue this is coming.
Yeah. So let's pause on here because we don't want to get stuck in like the details of the rental app today. If you want that, Andy and I did a webinar, I think 2 weeks ago.
Yep. We'll
send the link on there. And of course, you could also just keep it simple, call Andy and have him come do it. That goes in the details. What Andy is talking about is, hey, how to go out there and use this to add value and generate deals. So think about this. There's 40,000-ish properties out there. So I don't know, 15 to 30,000 landlords, if not more, some staggering number. And how many roughly are compliant on the single family side?
So I haven't looked at it in the past month or two here, but starting at the end of the year, they were less than 1,500 compliant. Let's triple that. You got maybe 4,500, 5,000. You still have 10 to 15,000 potential landlords to talk to.
Yeah. And so, let that sink in. So, maybe what's that, 15, 20% of the market right now, depending on quite a few numbers on there. So, not the majority by any means, still in the minority out there. And so the way I look at this, going back to that like attention and scale, hey, who do I have in my database? My clients, my database that owns property in Denver, whether they're a landlord or they're just a primary residence, and if they have any investing inkling, great touch point. And then who can I go out there and how can I find more of these people? I can go out there and do this. And between this and also what we'll talk about with Brady in a few minutes is like, well, hey, there's a huge opportunity to go out there and like reach these landlords. And that's been a big initiative where I started a couple months ago is I've got team members now dialing landlords to go out there and make the connection. Like, wow, this is a huge opportunity out there to not quite cold call, but go out there and, outreach, do some very big outreach. So we got this pool out there. How do you guys get in front of them?
Chris, I think what you're getting at and what I love about your approach is education, right? If you go out and try to educate somebody without asking for something in the first place, you build trust. When we all know, if you want to sell something to somebody, they have to trust you. Unless I guess it's 7-Eleven. I don't need to trust the guy when I buy a Snickers. But for most sales,
Gotta trust and buy that meat on the rolly thing there. You know about that sometimes.
there is a lot of trust when we're talking about
Older Chris doesn't trust that. Younger Chris did. Older Chris doesn't.
Yeah. Whenever you're buying a pre-made sandwich, there's a ton of trust there, right? But especially if you lead with education, if you lead with awareness, if you lead with, here's the issue that's going on, here's how we can add value. And by the way, I already found you all your answers for you. Here's the inspection group that we would suggest you go with. Here's your reinvestment opportunities with it, and on. Pretty soon, that's not a cold call. That's a trusted friend, and they're going to call you for a lot more than just one thing.
Exactly.
That's my experience.
Well, that, and they call you that, but that's also where you become kind of like the influence or a thought leader in their world. And when they have the question, they call you, or if their wife's friends or whatever other friend has a question, oh, I know this guy Andy you should talk to, or I know this guy Brady you should talk to. Let me connect you guys. That's how you get the referrals as well. One question in chat here I see from Pat. She said, are condos considered single family? Yes.
Here's the catch that Denver did. If you own 2 condos in the same building, they're calling you a multifamily license. That's a little wrench that they threw out there.
Oh, it's
pretty. That's part of the confusion, right?
I mean, okay.
We can help you even if you own 2 or 3 in the same building and you don't have your license yet. We can help you get you handled. But yes, it's every single condo. Anything that is owned by let me start over. Anything that you want to rent for more than 30 days, you got to get a license.
Yeah.
That's an ADU, that's a bedroom, that's a basement, that's if you have a separate entrance into a basement, even if they come in through your front door, they're still calling that a long-term rental.
Yeah. So, and basically everyone now, if you have a property in Denver, just go get a license. You're either overdue or you're going to be due by the end of the year. So again, going back to here is, hey, how can you go out there and, provide value? Well, I mean, most landlords don't know about this. So I always look at people, I look at a topic, hey, does a person know about this topic or not? Well, that's the very first thing. Most don't. If they don't know about it, the very first step is education. Well, if they do know about it, well, then it becomes down, great. Have you done it yet? And let me help give you a solution to that. Right. So education is, hey, do you know this is going on? And again, from a high level, don't worry about the details, but Denver County is now requiring every landlord to go out there and have a rental that's not an Airbnb. So multifamily was due December 31 last year.
Yep.
And single family is due December 31 this year. So those are your deadlines. They're due last year, due this year, get it done. And of course, you can kind of, don't get the details, but hey, does a person know about this? And give them a high level. So, Andy, I'm gonna put you in the spot here. If you put your hat on and you're your agent Andy, and you're out there talking with a client that owns a property, don't know about it, what would be like a 30-second, hey, do you know about this? Here's the summary on there. Can you give us a little like word track?
Sure. Hi, Chris. I got some news about what Denver's doing. Have you heard of this landlord license? You're going to say, no, I have no idea.
No, I haven't. The what?
Well, Chris, my wife was telling me that you had rental property in Denver. You have to get a license to get it. Don't worry. I can get you a tip sheet that covers everything you have to do. I can set you up with the right people to handle it. And once we get your license taken care of, if you want to have a talk with somebody like Brady, who can really help you maximize that value or add more to your portfolio, that's all I want to help you do, Chris.
Perfect. So again, very simple. And hey, and I loved it. Like, do you know about the landlord license? Question mark. Like that right there. If you just ask that one question and then be silent, that right there will kick off the conversation. Like if you get everything else, that right there is like, boom. There's what you write on the back of your hand if you forget it. Like that's that one question.
What's interesting, Chris? We get quite a few phone calls at the office, right? We usually explain the rules, and 8 out of 10 people, after they get done cussing, they go, I think I may want to sell. So if you're an agent, you explain what the landlord license is. You have motivated people. Maybe they don't want to sell. Maybe that's an emotional reaction, but they are playing into our hands for a transaction.
I love it. So that sets up for this next topic on this bigger macro trend. But first, can I answer the phones at your office for you?
I'm sure we can come up with a deal. How many words per minute can you type, and how good at taking notes are you?
Do you want to sell? Yes. And I want to give Andy a plug here. We'll send out an email here too, but he's doing some really good offers on here. That's just reducing the cost, what it costs for people to go through and have the inspection. Essentially, he's the easy button for you and your clients. Scan the QR code or give Andy a call or email there, get all the details, but people can save a good chunk of money, 50 or 60, 70 bucks. But most importantly, you save someone time and headache, which is worth way more than $100.
Absolutely agree. We've got a couple of out-of-state landlords, and we said we'll go in and replace all your fire safety bundle package, right? Your smoke alarms, your CO detectors, and your fire extinguishers. And they said, okay, cool. So we'll charge you what? They asked, let me guess, it's $250. We said, no, our install fee is $59, and we're only charging a couple bucks more than what Home Depot does for all those items. So it's just another easy button for you to pass on and say, here's some extra value. We'll talk later about what to do when you got that person that wants to buy more property in Denver.
No, let's go ahead and mention this right now.
Oh, here we go.
Because I just want to throw this because this is something that I had a big realization again. Because at current event, I'm incorporating this into. I talked about the attention and scale, up here. And as we were talking a while ago, I was like, oh, crap! I need to go in here and update part of our sales process on the left side there for like what our team of agents do. Because we have clients out there buying rentals in Denver or under contract in this year and realize while they're doing their standard home inspection, get the damn Denver rental inspection done as well. And Andy can do all that for you.
I can do all of it. You want to be really careful who you ask to do your home inspection if they're buying rental property in Denver, because not every home inspector is a rental inspector. Denver puts some.
Most are not.
Most are not. I believe right now there's 45 individuals that are qualified with Denver. That's 45 out of how many home inspectors are out there?
I don't know that's that.
Right, I don't know either. I don't know if I want to know that. I'd probably get sad about that. The big deal here is we've got a very great deal on home inspections. We only offer a complete home inspection. We're trying to save your clients over $500 every time they do a home inspection. And if you know they're buying it for a rental, we'll do the whole rental inspection for free at the same time. Cool.
Awesome. So this is going to take us into the second current event here on the appreciation party is over. Ooh, one more thing going back to Denver rental inspection. Don't just call your Denver landlords, call your other landlords as well. Hey, did you hear what's going on? Again, you're taking a current event, little, I don't want to say gossipy. Gossipy. Hey, you know what's going on? No, what's going on? Denver passed this. Because if you own a property in Westminster or Aurora or Littleton or wherever else, like Denver a lot of times leads the way. So it's another great touch point for investors outside Denver Metro. Outside Denver County in the metro area. All right. So current event number 2. Got a graph up here. And what this does is this red line shows the level of debt. So all these loans that Brady and the Green Team have done together, they're part of that red line out there. They've helped a lot of our clients, a lot of investors out there go out there and buy great real estate by the power of leverage. And so that's the debt burden that people have out there on real estate. That yellow line is the equity. And that is how much equity the person has in the property. So how much equity they have over debt? Well, it's a big number. And you can see here where that was red for a bit. Well, that was after the 2008 crash where prices, were underwater. We had all the foreclosures and values were below what people paid for and had debt on there. Well, now that has completely changed. And you see this huge delta here between the equity and the debt. And so this goes back to more the macro trend here of what is going on. Well, what's happened the last 10, 12 years because of the crash back then and, of course, the cheap debt we've had huge, huge equity gain through appreciation. And so what that does is, hey, that has given us a huge return in the marketplace and one that we want to recognize. And also something you want to realize is that the trend is your friend. Now, going to the financial advisor here, who's done a lot on the stock markets, the trend is your friend. Probably heard that term 1 million times in your career.
Yeah, that industry is not void of people trying to time things. I kind of take a different approach to it, but I love that stat because it tells you a lot about what's going on, and it tells you about the current condition, and what you have in your arsenal is something that nobody's thinking about in the real estate industry, or especially the mom and pop investors, people that own 20 properties or less, so 1 to 20 and everything in between. They're not getting good accounting and financial advice about how real estate investing works. They think they buy a property. I know you're going to go into this, so I won't spoil it. But
I love how you're teeing it up, though.
You have something you can share with people that they're not hearing from conventional sources. If you just spend the time to learn the language and figure out what's going on, there's a massive opportunity here for investors to level up, to turbocharge their investments in a way that can make you unique and add value to what they're doing.
So I completely agree about in the stock world, that's usually like day trading or hour trading or intra trading, very very short here. In real estate, we are not doing that. We're actually looking at much bigger trends. Let me get back to. I put a really fancy graphic up here too. I drew 2 red lines that should have been arrows. That just shows, hey, we've had this huge growth. I mean, right? Just boom. We've been climbing the mountain the last 10 years in terms of appreciation, equity gain. Well, we're not going to see this huge drop in values. We're going to see a little bit, which we have, and it's going to be a more flat, gradual gain. That is the trend right now from like the macro perspective. So we've had this huge equity gain on here, and that's what we understand here. That is the trend that's happened. And next couple of years, things are going to be, I think, a lot more flatter, a little choppier, and things have gone down a little bit this last year, but a couple percent. And a really key point here that it took me a long time to realize, very few investors realize it. I should say very few, mom and pop investors like us around the room and most of our clients out there, like, not the big guys or, they don't realize that equity is the wealth. That is the wealth builder out there. And I want to kind of go through a huge paradigm shift that I went through that's helped me change kind of my real estate business and also me as an investor, and actually go through the mechanics of it step by step so you can understand it and do it for your portfolio or do it with your clients, because all this equity in these properties in Denver, around Denver Metro, and Salt Lake and Austin and California, it is the key to out there building wealth. And so what I like to start off with is saying that Monopoly lied to you and me. We all played Monopoly growing up. I still play it and get angry at my friends, right? Let's play Monopoly, have a few beers, and then
that's a good game.
Someone
for
gets in a fight.
Yeah.
But I think everyone in real estate has played Monopoly, right? And so it's a very, very great thing to go into of a mindset, because we all start with our money and you just go around, go, and you save up your money, buy a place, go around, go, save money, buy a place, which is a great metaphor for life where, hey, go out there, buy a place, save money, buy a place, save money, buy a place. You just go around the board like that, right? That's how most people think about when they get into real estate. And that's how I was as well. Well, then I realized that is not the key to going out there and building a huge amount of wealth. These people, the really super successful real estate investors, that's not what they're doing. They're doing some creative strategies and also tapping into the power of equity. So how I realized this was I bought a 2-bedroom, 2-bathroom condo in 2011 at the perfect time in the market for about $67,000. A couple of years before, it was $200,000 plus. A great bargain, but here's the kicker, and this is what I want people to understand. I bought this property textbook perfect for like a creative deal. Like my first property, it was kind of just beginner's dumb luck, but I will take beginner's dumb luck. I bought this property for a complete 0% down, no money out of pocket, on a 15-year private note at 5%. Wish I bought like 15 of those, but I bought the property for no out of pocket. My first payment wasn't until 40 days after I bought the property. I had to write the HOA a check. Like, it was insane. So I bought it right, and I was like, cool. I'm like 27, 28. I was like, man, yeah, pat myself on the back. I'm doing great. I'm going to pay this off and enjoy the cash flow. So moved on with life, and I was not in real estate back then. I had my other businesses. And then I started doing some basic math and this was years later as I started coming into being a real estate investor friendly, really wanted to make real estate investing a major part of my life. And here's a screenshot from some software. We'll go into a lot more details later. I want to highlight one number on here. I went down and calculated, hey, when I pay off this property, no mortgage debt, how much cash flow will I have? That's the pinnacle right there. Paid off property and just take the cash flow. I'm of $8,500 a year in cash flow. Well, I mean, $8,500 is good, but that's not like going to make me retire early. Like, I will always take a check for that amount, but one $8,500 income stream a year is not going to make or break anything for me. I think that's probably for most people out there. And this is when I realized that, hey, this plan here of a paid off property, and by the time I'm about 40, I'm rocking. I'm doing well at life. But now if I want to go out there and actually truly get this, I have to buy, it was like 13.2 more condos to get to my goal of $10,000 a month in income and then pay those off. I did not have $750,000 to go out there and do that. And so, I don't say I got depressed. I got frustrated, and frustration for me leads to motivation. And I go out there and say, all right, well, I bought this right. I'm not the first dude doing this. What are these people with a couple commas and a lot of zeros in net worth? What are they doing? I went out there and studied them. I learned from them. And I realized that they're not going around Monopoly board like I am. They don't go around, go, buy a property, go. They buy a property, and then they skip the second, third, fourth greenhouse, and then they go to the red hotel. They leapfrog over it. And there's a lot of different ways to do it, but it's a very, very powerful concept, and it usually comes down to redeploying equity. And so what I did is I played real life Monopoly after I learned from so many mentors around town and building a bazillion spreadsheets. Is I sold my greenhouse, my condo, and then bought a red hotel, aka fourplex out here. And so we'll go into a lot more details on here, but here's what I want you to realize. My retirement cash flow, where it says annual NOI, went from $8,500 to $47,000. Now, I'll take either check if you guys want to write me that for the rest of my life, but $50,000 a year in retirement income, damn, that is a needle mover. That is a huge chunk. I mean, gosh, I could live off that if I absolutely had to. $50,000 a year, that can be lived off of if you need to. Like, it moves the needle. And so rather than me having to go out there and spend another $500,000, I took the equity from my hotel or my green home, my condo, and then sold it and used that to buy a fourplex. And I brought almost no money to the fourplex because I had all this equity in my condo. And so when I realized this was the key that really helped me to supercharge my portfolio, going from 1 door to 9 doors, and also really go from having like $8,500 a year in future retirement income to having like multiple 6 figures when they're paid off. And so that changed my outcome. It also changed my outcome with my clients as well. And I realized, I need to tell my clients about this. They need to know about this as well. So I started doing what I call portfolio analysis sessions, where I would just go through their portfolio, which we'll do in 2 minutes, and show, hey, here's what you do. Here's how to go out there and do this. Here's the concept. Here's how to go out there and build wealth, and got amazing results. And because of this, for example, because we were working with investors and we had people playing a 20-year plan, not playing a 2-month plan with interest rates and timelines, most agents saw about a 40% reduction in their business last year. We saw about a 12% reduction. I mean, so we got punched a lot less than the average agent out there. And then about 1/3 of these sessions we do lead to a transaction opportunity in the next 3 to 15 months on average.
Remind me to come back to that stat when you get there, when we start doing the portfolio analysis.
Okay, well, good time because you're up, Brady.
Oh, perfect.
So there's my note to switch to Property Llama. Do you want to? And so what we're going to do here is I shared a couple of screenshots. Property Llama is a tool that we built in-house to basically get rid of spreadsheets and do some much more sophisticated online modeling. So we're going to go through there and actually just go through a portfolio that Brady's put in here. So do you want to go through portfolio first, or the point you want to make?
I want to make, they're kind of related, but so the point that I'm making is, you talk about greenhouses and red hotels, and not everybody has the appetite for a fourplex or something multifamily. Some people just want to grow the portfolio, but in Monopoly, what you're doing is you're doing it one at a time. As soon as you have enough cash to buy a house, you buy that house. But those houses can buy themselves for you. Like that first house can buy your second and third house. Mm-hmm. We did an analysis just this morning with clients who were using equity in a house that they have a lot of equity because they've been paying it off. They bought it a long time ago. They've been paying it off, and they were just like you. They were thinking, as soon as we pay this off, that's the heyday. That's when we've hit our goals. And there's nothing wrong with that, of course. But when I showed them that by simply using the equity, and you don't have to sell it. Their plan wasn't to sell that, but just to take some of the cash out in a refi and use that to buy 3 more properties. So that they're turning one house into 4, but they're not even using their money to do it. They're using the first house to pay for the next 3. So some people don't want to buy the more complicated deals, which is, there's an appetite for that, and that's great. And some people just don't want that, which is fine too, I suppose. But you can have the portfolio build itself.
Yeah, you don't
have to do it with your earnings. You don't have to do it with the $200 that you're collecting by pass and go every time.
Yeah, and this is the power of equity. And like I said, for me and most people out there, this is a huge paradigm shift, and it takes some knowledge and education and numbers. So actually, let's dive in this portfolio here. And so we have 3 properties in here. We have a primary residence, so your typical, heavy equity heavy property, and we have 2 rental properties. We're going to start with the rental properties first, and then we'll come back and loop around to talking about the primary residence here. And so what you're seeing here is the dashboard, and you're seeing their whole portfolio. So this is something that most clients never get to see is, hey, I got 3 or 4 or 2 properties or 10 properties, but never looks at it holistically like you do when Fidelity or Schwab sends out all your accounts.
Yeah, it's all aggregated together. So all the properties are building those statistics.
Okay. Hold on. We are sharing the wrong screen. I am sharing the wrong screen. I won't drag you guys into that. That's on me. Thank you, guys. How about that? All right.
Looks better.
We'll go. Helps if people can actually see what we're talking about. So thank you, guys. So up here was the primary residence I was talking about, and then down here is the portfolio from a high-level overview. Now we're going to go in the numbers on here, and Brady touched on a great point where, hey, I had the appetite to go up there and buy a 4-plex. Some investors don't. There's no right or wrong. It just depends on what you want to deal in your risk tolerance. And that is always the very first thing we sit down and talk about with clients is, hey, what are your goals? What's your risk tolerance? Where do you want to go? Because all real estate is how it gets you there. So talk about the goals, and then we look at their global real estate portfolio, and we dig in the assets. So we're going to go through here and give me the summary of like who's the investor landlord avatar on here, Brady.
It's just a typical person starting out in their mid-30s, So I think real estate is this funny thing because if you think of people that do well, it's one of the most reliable ways to create wealth. And so a lot of people get that when they see people making money in real estate. And then they're in many cases, they look to the financial institution about money advice, and the financial institution in general is steering people away from real estate, mostly because they don't understand it themselves. And if they do, they can't compliantly talk about it, which is literally why I'm in this industry. I could not get a compliance department to help me meld real estate advice and traditional financial advice. So I left that industry to work in this industry to put those things together. So this is somebody who, kind of like you, Chris, they bought these properties, they want to get them paid off, they see it as a great addition to retirement income. They want some what people call mailbox money. They want that passive income. And so they bought some properties when they had some money, and now they're working on paying them down. And due to the great equity boost that we've had in the last handful of years, they had low rates, so they have good loans on these properties, and they have quite a bit of equity, but they're just gliding on that. They're paying it down slowly but surely.
Yep. So, like I said, so this is a very, very, very typical avatar of a Denver landlord or Denver Metro landlord that owns a couple properties, and they bought it a couple years ago. And they have a lot of equity and the low loan to value. So we don't have time to go through all the metrics on here, but what I'll really focus on here is this NOI. We have this $48,000, or we'll say $49,000 to round up here. So this is the cash flow you have. So it's rents minus all the property expenses, but no debt. So this is a paid off property cash flow, about $49,000 a year if they paid off their 2 rentals. Now, currently, they're making about $23,000 a year on their properties. So they're making about $2,000 a month. Fantastic. So I like to look at these 2 numbers initially. Now, when I talk to clients, 9 out of 10 want $10,000 a month in income. That is the most common goal I hear. That was my original goal as well. I think it's just, it's a nice round number, and hey, 6 figures of passive income. That's a very, very comfortable retirement, right? Like, congrats. So I think it's a very common goal. So we're going to baseline off of that. Like, hey, we want $10,000. So that means we want to see $120,000 in net operating income. So Brady and I are sitting down with this client, and hey, Mr. Client, what are your goals? Where do you want to go? Hey, we want $10,000 in income for our retirement. So from high level, we map out, hey, well, you are, what, about 40, 45% of the way there? But we have to buy more properties to get you there. Let's talk about how we do that. And so really pay attention to this future cash flow number. And this I could spend hours talking about, but Brady and I won't go off on a geek talk, because this is a number that you want to be focused on, your investor focus on, not the cash flow number. NOI is the real target to focus on out here. Anything you want to add on there, Brady? Or do you want to jump in?
You said it beautifully.
All right. And so, going back here to this formula, our step-by-step process is, hey, number 2 here, if you look at the global real estate portfolio, and we linked it back to their goals. So their goal is $10,000 a month in income. Well, if they pay off these properties, they are about 45% on the way there. So we look at the portfolio, we line it with their goals. Step 3, so let's look at your individual investment properties. So in this case, we have 2 properties here. And I'm just going to go in the first one here. Actually, I'm going to open up a new window on here. So we'll give this a second to load here. And then what we do is we want to drill down into each asset. Because, most people are very fixated on, hey, bought this property in 2015 for $300,000 and now cash flows this. And real estate investors, we're all guilty of this, is we're always anchored in when we bought the property. And frankly, it does not matter. That is a huge mistake that makes people leave a lot on the table. You look at the numbers today.
I'm going to point that out because that's one of my major pet peeves. Not so much that people do it because it's natural, because that's the numbers that are available to them, but that the industry hasn't caught up to that. Like if I was talking to a financial client, in my financial advisory business, if I was trying to tell them that their returns that they got this year based on their original investment, so if they invested $100,000 into a portfolio, 30 years ago, and now it's worth $500,000, which isn't, that's actually pretty conservative returns, are pretty doable returns. But if that portfolio earns another $50,000 in a given year, so let's say it gets a 10% return when it's $500,000, I would never, and no one in the industry would ever go back and say, look, you got a 50% return based on your original investment of $100,000. What a great advisor I am. But we do that in real estate all the time because that's the numbers that are available. I know what I paid for it, and then I can see how much it appreciated or how much cash flow I got in a given year. And we relate those two things, even though those might be 20 years apart. That is just entirely irrelevant, like you say, but it happens in real estate all the time because people don't have access to the other numbers until now. I keep
love
teeing things up for you.
No, this is we could spend like hours talking about it, which I love. So this is exactly, so that current value is a huge thing we need to do. Like, that is step number 1, is we have to get today's numbers. So we got the current value on here. And so hint, agents, great opportunity to go out there and do a CMA for someone, either a full CMA or just, hey, let me just kind of ballpark it real fast, right? So get some type of current valuation, because most people don't know, or they're going off of Zillow, right? So great opportunity to go out there and actually get a current valuation on here, and we'll come do a health check on the property. Now, there's a lot going on here. I want to focus on a couple numbers. I'm going to follow what I call the green path here. I want to talk about return equity. And this is where we're going to spend the majority of time here. Return on equity, because we've been talking about equity for, a half hour now. How do we measure it? So this is where we have to understand, what Brady said is, hey, how do you calculate your investment? So this is the equity. So in this case, this person has $450,000 in equity in the property. Now, they put down $125,000 5 years ago. So when they're calculating returns today, do they use what they invested 5 years ago, or they use the equity? It's equity, just as you pointed out. So what this number says is, hey, you got all this equity here. This is your piggy bank. This is like your piggy bank in your real estate. And we're going to take the 4 ways to make money in real estate: appreciation, your tenants paying down the debt, the cash flow you're getting, and the tax benefits or depreciation. And then we take this over the next 12-month period. So we're taking today's numbers and today's returns, and we're saying, hey, about $40,000 divided by $450,000 is 8.9% return on equity. Now, don't get too fixated on the math here. I just want you to let's just say 9% return on equity. And so one of the ways my mentor described this to me, and it just, when he said it, man, it hit me hard, Brady. Like this guy is super, super successful. He said, hey, if I'm making 9% on my money in there, I'd rather be in the stock market, because what's the historical performance of the stock market?
If you're careful with your fees and you reinvest dividends, 10 to 11%.
Yeah. So 10 to 11%.
And no effort.
Yeah,
right?
it's
It's completely
than 8.
passive. Last I checked.
Oh, man. You're a real lender, man. Great job.
Yeah.
Right? You got the math down.
Yeah, I get it.
No, we're talking about this thing. This is where it becomes down. Like, this is such like a powerful concept. You want to relate to what people know, because people don't understand real estate investing. People know stocks. So that's like their anchor-based reality. Now, we're not stock advisors, but we can use those types of like numbers to help paradigm shift it. And he said, hey, if I'm making less than on the stock market, if I'm dealing with tenants, toilets, liabilities, floods from last week, I want to make more money than I do in the stock market, right? And so this comes up on here. Are you happy with this return equity? I am not. So, hey, one there, and just, hey, I'm educating the person. And you get such an amazing reaction from people on here, because I would honestly just look at the stock market. I mean, heck, CDs aren't too far off of that right now, you know?
No.
So there's a powerful concept. And then the reason we get this, and this is usually a story here, and this is very common. We see a 7 to 12% return equity, and we see a very low loan to value. So there's about a 30% loan to value. What is loan to value, Brady?
It's how much debt you have relative to the value of the house.
Yep. So has 194K in debt, divided by 645 is about 30%. Now, here's a great concept that you have to understand as an agent and as an investor, is that leverage is another wealth building factor in real estate. And you can get leverage all day long in real estate. I mean, that is encouraged. The government backs it. A lot easier to get leverage on real estate than the stock market, right, Brady?
Yeah, and it's guaranteed for 30 years. Like margin and options and things. Well, margin particularly is callable. You can borrow against your stock portfolio, but they could always turn that off and say no.
Yeah. And so this is where we get the concept across to our clients that, hey, the power in real estate is you want to have leverage. That's going to increase future income. You will sacrifice a little bit today, but you're going to have delayed gratification and more in the future. And the last thing I look at, actually, I'll go to cash on cash, and this is, to me, it's a red herring. Cash on cash at year 5, year 6 is a meaningless metric. Cool, I'm making $11,000 a year based off my investment of $120,000 5 years ago. It's a misleading metric, but it gets so many people like off the track. I'm trying to think like some metaphor where they're like not quite going off the cliff, but going in that direction, you know?
Yeah, they're following the wrong thing for sure.
Yeah. And then cap rate, a lot of you guys don't know about this. This is just a metric to help measure how a property is. And a 4% cap rate, not bad for Denver, not great, but it's a low rental. And so when we see this here, it's like, wow, here's an opportunity to go out there and redeploy the equity and maybe go out there and take some steps forward to go out there and buy additional assets. So what we're going to model here.
You mind if I chime in? I want to just say something in a little bit of a different way, because sometimes I see people getting hung up on this, especially when we're looking at digits on a screen. Sometimes it's helpful to point out the extremes to see what Chris is talking about here. Imagine I pay cash for a property, right? Some people would be super proud of being able to do that. And I would be proud to be able to do that, but I would never do that. Not at this phase of my investing anyway. But here's what happens. If I buy, say, $100,000 worth of real estate, I don't know where you'd find that around here, but just for a simple number to do math on. If I buy $100,000 worth of real estate with cash, with no debt, and it appreciates by 5%, I get a 5% return on that investment plus the cash flow. But I'm going to isolate, but the cash flow is a different metric, but I'm just isolating the appreciation here. If I pay cash for that property and and that property appreciates by 5%, I get a 5% appreciation on that asset. If I just leverage it at 50%, then a 5% appreciation on that property is now a 10% appreciation for me because I only spent $50,000. And if I get a 5% appreciation on my $50,000, that's 10% appreciation. That's why in real estate, they call loans leverage. It's a perfect word for that. And that's just at 50. The higher I take that leverage, the larger that return is. And I'm not a fan of doing, I wouldn't say I'm not a fan. I recognize that there's risk of getting too high a leverage, like 90, 95, 100% leverage. There's some risk there because if the market turns over and we have to wait a little while for the values to come back, that costs me more in my equity than if I had bought the house with cash. However, if I am not that risky and I want to have a comfortable amount of equity, but I still want to use leverage, then it's not a black or white question. It's literally, how much leverage do you want? How much are you comfortable with? Are you comfortable putting 25 or 30% down so that if a correction does come in the market, you can ride that out? You're still getting a massive advantage on the return on your investment by leveraging that property. And so it's this gradual thing that's happening all the time. As you pay down debt, every percent of return that you get in appreciation on that property represents a smaller return on your equity in that given year. That's why you see in this example that we're using now, because the loan has been paid down to 30% of the value. Now it's getting paid down and the value of the property is increasing at the same time. So when we're at a point in this example where that's reached 30% of that value, both because of appreciation and because of debt pay down. That's a low loan to value, but that means that every next dollar of appreciation that you're getting on that property is a smaller and smaller percentage of what you have at stake in that property.
Yeah.
Which is why loans are called leverage.
So that's so well said. Now we're going to visualize that. I'm going to click a button up here and just run a scenario of sell this property, execute a 1031 exchange, which helps kind of defer capital gains, and you buy a bigger property. This is what I just used my Monopoly example. Sell a smaller asset, buy a bigger one.
So we're using 70% of that property value because you have 30% leverage. So you're taking the 70% of equity and turning that into 20% leverage, or what number did you use?
I put 35%.
30. So you're using that now as 35% leverage on a bigger property. So we're re-levering, we're getting leverage back in your favor.
Yeah. And so what this does here, this is where it's so cool and helping to like get clients to understand this conceptual shift is then this. And what this does is it models selling this one property, then buying a new one, but then doing the whole portfolio level. So it's actually giving you still the whole portfolio view. So we have the goals here. And you can see here, based on their future retirement goals they have in the system, their current portfolio, they would get there in about year 28. Now through this one move, they get that goal in about 5 years instead. So we reduced it from a 25-year to a 5-year goal to get to NOI. So if you think about that, and you can do different metrics on here, think about that, you talk, hey, Mr. Client, if we do this one transaction, we make this smart move, we're going to go from 28 years down to 5 years. How does that make you feel? And of course, I mean, it's like, that is powerful stuff. I'm like, holy crap, that's what I can do. And that was what I realized. Well, I got to buy like 18 condos. I was like, oh, or I could do this. And so scrolling down here, and I won't go through all this, but basically, green is good, red is not good. The left side is the current portfolio. The right side is the new portfolio. And so we're increasing our return on equity. But the biggest thing I want to focus on is this future cash flow of NOI. Right now it's about $49,000. Well, now with this new thing where we sell the whatever house that was and buy a fourplex or a couple other single family homes, we have now increased that future cash flow to $107,000. So we have more than doubled their retirement cash flow in one move, or basically two transactions. Sell this, buy this. So let that sink in there. When you see that, what type of shift does that do for a client's mentality? What type of shift does that do for your property out there or for your portfolio out there? So think about that. So it really helps to move the client's goal forward, and we get a couple transactions out of there, right? So it's always a really good win-win. But this is the wealth building concepts of the equity, of the leverage, of looking at the future cash flow via your NOI. This is a way to go out there and supercharge your timeline to getting to your goals, help your clients get your goals as well.
Well, and check that out, Chris. So you see this, but for everybody watching, look at the LTV. So that's the loan to value of the portfolio. It went from 30% up to 54%. So if you have people that are more conservative, like is 54% loan to value on a real estate portfolio, is that aggressive? Not at all. Like that's still very conservative, and it has that big of an effect on your goals. And as the agent, you sold a $650,000 property and purchased like I think 1.8 or something like that on this new property. Like, is that good for business as an agent? Absolutely. Are you helping the client reach their goals faster? Have you separated yourself from other competitors out there as agents by understanding this stuff? It's a massive shift in how people are looking at real estate.
Yep. And so, I think we kind of got you guys a high level, and really this is like the core stuff you need to know, and also like really the tip of the iceberg. And I know we got like 5 minutes left, and we'll wrap up here. And this is where we just analyze the investment, do that. Hey, rent a scenario, and hey, Mr. Client, let's put together a plan. Actually, let's go out here and really get these numbers. Hey, go talk to Brady and go get the interest rate. Let's go run a CMM and go walk your property. Let's talk to your property manager and see what your rents are like. Like, go out there and just get all the data, and you get that person taking action and so say, wow, if I did this, what could I do? And hey, if you sold this, let's go get a few fourplexes as well. You get out there and start taking action, which leads to results.
And guess who refers better than just about any type of client? Investor clients.
Yes.
They talk about it with their family and friends, and you become their go-to agent for investors, and they refer better than any kind of client.
Yep. And so, I'm going to cram a lot in the last couple minutes here. So here's an action plan is I would just start brain dumping. Who in your network has equity in their property? Who has a rental in Denver? Who has a rental in general in Denver Metro? Who wants to be an investor? And you want to reach out and provide value. Now, again, we put a couple of bullet points on there. Hey, reach out and talk about the Denver rental application. If you're in Denver or you're outside, you talk about the updates on there. Go out there and talk about the power of equity. Go out there and get them to do a portfolio analysis. Go out there and right now talk about property taxes. Like, there's things to talk about on there. So go out there, but you got to start getting your A-list of clients and going out there talking. Now, all this information, you guys can calculate this. You can put together some scripts, you can put together some spreadsheets. If you want like the step-by-step program and using the software and also getting Brady's expert help with your clients, do check out a new program we have called the 7-Figure Investor Agent Program. It essentially is a program designed to help agents figure out how to achieve financial freedom through real estate and also help their clients do it as well. Just all the stuff we talked about, but a lot more just step 1, step 2, step 322, and also using the software as well. And this is everything I've done for myself as an investor and what I've done with my clients, where I've done, almost $300 million in transactions, mostly through investors. And so what's really cool about this, we are doing these in small, intimate masterminds, about 10 to 15 agents first. And we have found that the best way to do it is by partnering up with a lending partner, the great ones at like the Green Team, because I'm an agent. I know the numbers. Brady knows the numbers, and Brady has the lending team behind him. So it creates a lot of synergy there. 1 + 1 = 9 synergy. We have the first one kicking off. It is a paid mastermind, end of May 31st. I think that's pretty much already filled out, but we're going to be doing more of these.
We're not quite full on that.
Okay.
Yeah, we have 12 of 15 as of today.
Okay, so there's a couple left.
Yeah, if people want to still join, that one's still open.
Yeah, and so, if you want more details, just reach out to Brady. We can get you them. But again, if you guys want a step-by-step program, go out there and follow all this. Definitely a great program. Otherwise, please, please, please take these concepts. You don't have to go to this program to go out there and apply these concepts. If you want a shortcut, do it. Otherwise, take the concepts, take the current events, learn the power of equity, and go out there and add value to your clients and do a bunch of deals. All right, everyone. Well, we're at the 1 hour mark. Andy, I appreciate you coming out. Brady, I appreciate you coming out. Everyone out there watching, I appreciate coming out to the webinar as well. I know we went through a lot on here. We'll send out notes. If you have any questions, reach out to me, reach out to Brady, reach out to Andy. We love doing this stuff. Thank you, guys.
Thanks, Chris.
Thanks, Chris.
Oh, contact info for Brady. That would help. We'll put that in the show notes. What's the best way to get a hold of you, Brady?
Email or phone. You want me to rattle that off now?
Yeah, go ahead.
Brady.mullen@ccm.com.
All right. And we'll put that in the show notes as well. So Everyone, thank you. We'll see you soon.